Check out this clip from the Compound Podcast. They are a traditional financial podcast. Check out what they have to say about MicroStrategy.
What is this number? 133,000 in December 2022. They're now up to 252,000 Bitcoin. It's a 90% increase. But the value of their Bitcoin is up 723% since they started it. So the value of the Bitcoin that they hold went from $2.2 billion up to $18 billion. So you've got this coupled with the fact that it's trading at a large premium. Next chart, John, just makes for a wild story. And you can laugh, and I have, and you can talk shit, and I have.
Hold on. Can you explain this to me?
He's won, and he's made so much money. It's insane.
So if you buy MicroStrategy right now, you're paying three times what you would pay if you just bought the Bitcoin ETFs.
Let's assume that the underlying business has no value, and I'm not saying that, but let's just assume that it's pretty close to zero.
It's tiny.
They make $100 million in revenue and below $400 million.
So there you go. So it is worth zero. So relative to the size of the Bitcoin holdings, you're paying a 3x, but it doesn't matter because
why would you do that?
Because it's working.
All right, but seriously, why would you do it?
I don't know
I know it has worked.
No, I don't know why you would do it today. I don't know the fundamental reason. I don't know enough about like option Greek math and the deltas and all that sort of shit, but it's working. And it's kind of scary because what if Michael Saylor becomes like a top 10 richest person in the world?
So I wrote a piece last month about how MicroStrategy has been historically bad at timing the market. And pretty much all of his Bitcoin purchases or all of MicroStrategy's Bitcoin purchases have happened when Bitcoin was like at or above around $40,000. When it dropped down to like 16,000, he bought almost no Bitcoin in that bear market of like late 2022 through 2023. He keeps YOLOing around like between $50,000 and $70,000. But to answer your question on I have no idea why it's trading at a fat premium either, except the fact that it's good for Bitcoin that they keep issuing equity and debt to buy more Bitcoin because like
it's great for Bitcoin,
right? So like
if they're permanent bid,
it's. Yeah.
Right. He's doing like the buyback for Bitcoin, which is not a corporation, but he's acting in that role where he's taking on debt.
Selling stock.
Yes.
And the market, and the price isn't moving down. So it's just like free money. And it's just, how does this not?
He is like single-handedly willing Bitcoin to 100,000.
Right.
Well,
he's always there to buy.
Yes, but Bitcoin had like an $850 million inflow to the ETFs alone the other day. Yeah. So it's not just him, but my God, what is like? I don't know enough about like the convertible debt offerings to like really explain in plain English what the hell is happening here. It's wild.
I would love for there to be like a Bitcoin bear market that ends up getting a margin call because like most of the debt is like very like cheap debt because it's convertible notes, but I don't know if he still has any outstanding just long-term debt. Basically his game has been issue convertible notes, the price goes up and people just convert that to equity so he doesn't have to pay it back. But they also keep issuing just senior secured notes at like 6 or 7% that they then refinance with new debt to then buy more Bitcoin. If hypothetically Bitcoin had a like 85% drawdown, he could get margin called and then have to like sell some of his Bitcoin to pay back creditors.
It's like a
which
legal
would make it spiral down.
It's like a legal Bitcoin.
We haven't seen what it looks like on the way down.
It came close. On the last bear market, somebody calculated that like the margin call price for him hypothetically would be like around $15,000.
Where is it now?
I don't know, but like on Bitcoin's around 70K. I don't know what price it would have to hit for like him to have to sell assets.
So a really interesting clip to see there. Traditional financial podcasts are starting to get interested in MicroStrategy. They're seeing the prices go up and up and up. And I think we're going to start to see more of this. We're going to start to see some more of these YouTubers who are more TradFi talk about MicroStrategy. They're going to be getting more interested about what they're doing. And as you guys saw in that clip there, a lot of these TradFi people are not really going to be understanding exactly what's going on at first. And, I'm sure they have a great podcast. I'm sure they talk about some great things and investing methods. But you can see that there's a lack of awareness of what MicroStrategy is doing. Like when we see them talk about things like, potential MicroStrategy margin call that could potentially happen, or the MicroStrategy margin call that would have happened back in 2022. And he also talked about, I hope that they get margin called in the future. It'll be funny to see Bitcoin go down. But there's hundreds of thousands, if not millions, of Bitcoin holders in the United States alone. I believe they are a U.S. podcast. Why would you want to see something like that? And just not having a general understanding of what MicroStrategy is doing. I think we're going to start to see more of that. But as you can see right here, just to debunk what he was talking about, he said MicroStrategy didn't buy during the bear market. He didn't buy the bottom. MicroStrategy bought throughout the bear market. Obviously, they weren't able to buy as much Bitcoin during the bear market or as in much volume. It's just because they didn't have access to the amount of liquidity that they have access to now, or during a bull market when Bitcoin prices are up. But you can see every step of the way, MicroStrategy has bought Bitcoin and they have not changed their focus. So just to debunk that. And then also he talked about the MicroStrategy margin call being around 15,000 back in 2022. That was debunked a long time ago. I'm going to play this clip here from Saylor to just explain that. Let's go ahead and check it out.
All right, but you've also taken on debt in order to actually accrue that position, which does incur a certain amount of risk, doesn't it? I mean, I know, you've got, 6 and a 1.25 senior notes. They're, 2028. You've also got maturities that are out there, but there's concern in the market about margin calls, about collateral calls, certainly on some of this debt. Can you clarify for us exactly what those are under the covenants that you currently have and how they may impede your financial flexibility?
Yeah, sure. On a multi-billion-dollar balance sheet, we've only got a $200 million loan that we have to collateralize, and we're 10x over collateralized on that right now. If the market traded down by a factor of 10, we've got cash and we generate cash flow. So this has all been, the margin call thing has much ado about nothing. It's just made me Twitter famous, so I appreciate that. And the Twitter trolls love to beat up on me because it gets them engagement. As for the company's balance sheet strategy in general, we borrowed $2.2 billion at a blended interest rate of 1.8% before interest rates doubled. Junk bond indexes from 426 basis points to 820 basis points. Mortgage rates have doubled. If you had a chance to grab $2 billion at 1.5% interest, it seems like a reasonable thing to do, and I'm glad we did it. Most of it is unsecured debt. 1.7 billion of it is unsecured. The 500 million comes due in 7 years after we borrowed the money. So we feel like we have a fortress balance sheet. We're comfortable, and the margin loan is well managed.
So you can see he debunked that a long time ago. And I think the average investor, people who will be getting into MicroStrategy, Bitcoin over the next year, potentially because of higher prices, they're not going to fully understand everything MicroStrategy is doing. And there's this clip here from Ben Workman, shout out to him. He explains all of the pieces and parts of what MicroStrategy is doing when it comes to the convertible debt, the ATM offerings, all of that. And this clip I just want to share with you guys because it really helped me understand everything MicroStrategy was doing. So let's go ahead and check out that clip. Leave your thoughts in the comment section below.
The best storyline in corporate finance today, because he's taken a very non-traditional approach to this, but he's using all the traditional levers that some of these companies have. He's just utilizing them in a different way. So when you look at kind of the levers that a company like MicroStrategy has to pull on as they implement this strategy, they've really got a few main ones, right? There's the ones that everyone kind of knows about at this stage. There's traditional debt, right? Just taking a loan from a traditional lending institution. But in their case, they're taking that traditional debt and converting it into Bitcoin. They're buying a hard asset with that money. The other ones that you're going to have are things like at-the-market offerings, ATMs, which most companies that are publicly traded, they have. It's a way for them to raise capital basically by selling their shares into the market at whatever the current prices are, right? So they sell a share, they collect whatever the dollar value is associated with that share price. And in traditional, for most stocks, you're looking at them using that capital for operating expenses, right? Something that may not be accretive to the shareholders directly. If you're just using that capital to keep the lights on, the people that are holding the shares are getting diluted every time that you do that. And that's a problem for a lot of capital intensive organizations, right? To stick with the Bitcoin mining or the Bitcoin space, the Bitcoin mining companies have this problem because there's a lot of capital expenditures that need to be made to buy the mining equipment. And so a lot of times, because they're not good candidates for traditional financial instruments, traditional debt, they have to actually go and raise most of their capital through these ATM offerings. And that dilutes the shareholders underneath, right? And if you can't generate as much value as you're diluting, they've now lost value in their shares. So MicroStrategies is a little different, right? They're essentially looking at this going, when can we use the at-the-market offering in an accretive manner to our shareholders? And what that looks like to someone like Michael Saylor is they'll look at what is kind of the net asset value of our company, right? Which has largely become tied directly to their Bitcoin holdings. I mean, they have about $17 billion worth of Bitcoin on their balance sheet right now, and they've got, 4.2 billion in debt. But so he's looking at how's our stock trading relative to that asset value. And if our stock is trading higher than one, using the ATM is accretive. Now, he's got other tools that he can use as well, so he doesn't have to use it in non-pristine conditions to do so. But when you get to these periods where, Bitcoin goes in these cycles that everyone's seen, right? The 4-year cycles where the price starts to run and then you get these lulls. Well, what we're watching right now is we're in one of those cycles where it's moving up. And that brings excitement in the market, and it brings more eyes to MicroStrategy because they're really the first player to do this at large scale. And that new capital coming into the company has pushed the share price higher and higher. So now they're trading, closer to a 3 times net asset value. Well, using an ATM when your share price is 3 times the underlying net asset value on your balance sheet, now you've got a really accretive method to purchase an asset to put on your balance sheet. So he's leveraging those inefficiencies in the market and saying, I can create continued value for my shareholders by ensuring that if I use the ATM and I'm issuing more shares, they're getting more shares, more Bitcoin per share allocated to them, right? So the shareholders win. And this is a cycle that he can do over and over and over again whenever the conditions are right. So it's a new way of thinking about how to use an ATM versus the traditional, we'll use it for an acquisition, we'll use it to fund operations, whatever they may need it for at the time. MicroStrategy is basically saying operations are covered. We have positive operating cash flow, no problem there. We're going to use that capital to buy a hard asset that provides a lifetime of potential return to our shareholders. And that's what they've been doing with the ATM. So that was a new approach to using an ATM. Then he went a step further and he looked at, well, what else is out there in the markets that there's demand for? And one of those things is the convertible debt, right? And convertible debt, for people that might not be up to speed on exactly what those instruments are, is it's a bond with an option to convert into shares at certain prices, right? The conversion price. And there's certain funds or institutions out there that can only trade convertible debt. And so he was looking and going, well, where is there demand out there in the market that will bring capital into this ecosystem? And what do they want, right? Well, they want volatility. And so what Saylor's doing is he's offering them a product where he's going to sell these convertible bonds at 30, 40% out of the money, right? He's selling them at future prices. They'd get those shares at a price that's 30 or 40% beyond what it's trading at today. And then he's giving them this bond that they can now trade as a part of whatever they've told their investors they're going to do, which is trade convertible bonds. So now they're in the ecosystem. It's a new pool of capital and a new set of demand that comes there for you. And what Saylor's doing is he's taking the capital he raises from the convertible bonds, and he's doing, you guessed it, going out, buying Bitcoin with it, putting it on the balance sheet. So it's another one of those ways to lever future value of their company, which is already higher than net asset value, and collect more money through a different instrument and bring that in, put more Bitcoin on the balance sheet. So he's been really using these levers very strategically throughout this process. And we got to keep in mind that we're only about 4 years into this with MicroStrategy, right? And the important part, I think, for him and what he really focused on early was scale. So we saw him being very aggressive throughout the last several years, making sure that their balance sheet is really directly tied to Bitcoin because it creates a separate product offering that they essentially have to bring to the market, which is volatility, right? Everybody loves volatility out here in the markets, whether you're an equities trader, whether you're a convertible bond arbitrage trader, like whatever your game is, you want volatility. That's how you create the returns. And so it's bringing all this institutional level capital to the table that's really made them the premier product for volatility in the market. And the more volatile it becomes, the more interested people are in trading it, right? So it's a very interesting dynamic that he's really laid out for the markets with a new product that has now eclipsed an enterprise value well beyond what they ever generated with what they actually core did as a business, which was the BI platform, which still performs well, generates all the cash flow that enables all of these things. So when we look at market cycles, right, which was one of the other questions you'd asked, there's different things to look for. With Bitcoin going in these bull and bear markets, you start to get this expansion and contraction of the net asset value, right? The multiple to net asset value. It expands and it contracts as there's more money coming to the stock, as money's coming out of the stock. And that brings different vehicles to use. You use different levers during different times. So say a company was trading below net asset value for whatever reason. That's a tough sell to go issue equity or raise convertible debt because you're doing it below essentially the net asset value of your company. That's not really accretive, and you're going to introduce large levels of dilution early in this cycle. So what a lot of times you would see people do is they would just go raise traditional debt. If their cash flow can support the traditional debt, they'll start there. And then you wait for these cycles. If you're buying an asset like Bitcoin that you know is going to be volatile and you're expecting it to increase in value over time as the dollar debases, then you've got time where you can wait for that value to come, for that multiple to your net asset value to expand. And then you've got ways to get out of that debt if you want to, right? You could go issue a convertible bond and you could take that, refinance the debt. Or you could go use the ATM if you get a big squeeze in your share price and you could use that capital to get rid of it. But that's really your starting point if you're a cash flowing company. As that multiple expands out, you can start to look at really the two main other drivers, the convertible bonds and the ATM. Now, the ATM, you like to use sparingly and you like to use it more when that expansion has really happened, when you're getting in the 3+ multiple to net asset value. That becomes really ideal conditions to start using an ATM. But when you're kind of in that, 1.5 to 2.5, one of the best things you can do is you can sell the convertible bonds 40% out of the money, right? You can take your share price that's trading at 2 times NAV, and you can get the money at another 30 or 40% beyond that. So you're issuing less shares than what you'd have to do with an ATM today, but you're collecting that money today and buying the asset today that you think is going to appreciate. So when I look at it, I kind of see it as being your first stage is going to be your traditional debt if you're just starting out. Your second stage is going to be issuing the convertible debt. And then once that volatility really picks up in your stock and you're getting more of these wild fluctuations, when you start getting those squeeze conditions into your share price, then it's time to look at the ATM and really start utilizing that value as well.